The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Dave in Clearwater. Hey, Dave, what's going on?
I just wanted to express a flat-out thank you, Tom. I've learned more about trading from you than about any other previous 3 or 4 books I've read combined, and I just wanted to extend a heartfelt thank you because you've helped me make a lot of cash, man. There's no two ways about it. Not only just through insights, but just the things that I've learned from you,
cool,
and being able to call trades on my own.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day out there. Safe day. It's making a great night, folks. Let's take a look at one of our 4 agreements. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. In every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We had the Dow down 198, NASDAQ off 52, S&P's off 26, gold contract down $32, trading at $1,712 an ounce. Silver down 96 cents at $31.66 an ounce. Platinum off 33 bucks at $1,493 an ounce. Copper down 6 pennies at $3.48 a pound. Light sweet crude down $2.75, trading at $97.75 a barrel. Bonds up 25 ticks at 142.21. King dollar up 32 ticks at 78.88. Euro down 63 ticks at 133.47. And the yen is flat at 77.69. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do? You get down 26 points. Volume out here, the volume on the NYSE and the NASDAQ, the NASDAQ was big. Volume on the NYSE, not that big, folks. 930 million. Now, that 930, no doubt, is heavier than, how we came up. But the reality is that you need heavier volume to get into lower price. That's your S&P. We go to the Dow Industrials. We take a look at the Dow Industrials. What the Dow did is this. She's down $1.98. You are at 11,997. Now, what that did get into the bar of the 30th, which was 12,045. That's saying, okay, you chipping into it. We're going to be coming down to the other side of that, which is the 11,231. Now, NASDAQ Composite. NASDAQ leading up, leading down, leading the whole ball of wax. Composite, bottom line, you had expansion in volume. On the composite out here, what we did is this. We did 1.8 billion versus 1.6. The composite itself also needs more volume, but you did have that expansion come in. Now, the composite also only could get to 2467 on the way up, where the high out there was 2753. Composite making its way back down to this 2441 area. I suspect what we're actually going to do is get down to the very lows of October 4th. Now, the reason I'm saying that is this, folks. If we go over to King Dollar and you look at King Dollar, what we had out here, okay, so King Dollar today goes topside with conviction. We had a wide price spread out here today. 78.15 was the low. 79.09 was the high. We did 22,000 contracts. You had an acceleration of contracts. King Dollar wants to go make its way up to a B point. The B point on the dollar right now, folks, is 79.87. Now, at 79.87, it's not like you even have a lot of volume. There's only 14,000 contracts there. So it's not going to be hard to take that out with volume. If we get even closer, it's like what I want to see, bottom line, even though that there is a 14,000 there, I'd like to see 30,000 taking it out. 30,000 taking it out gets you 82.50 in King Dollar. If you're watching Tiger TV, I'm going to bring this back and I'm going to show you what happens at that level. And if you're not watching it, we're going to verbalize it so you can visualize it. Okay, we're at 70 8.80 right now on the dollar. What we have is this. Once you get to 82.50, if in fact we get over that 79.80 level with volume, what happens is this, is that I can make a case in 2 seconds that you're not only going to go to the 89, you're going to launch the 89. The reason being, folks, is that you take the highs of January of 2011, which is 81. You take the lows, which is 73. You add 8 onto that baby, and you're up into 90. And if we launch the 89.71, that was the high of 2009, watch out. Well, it's going to be great for Go Long America. It's going to be pretty tough for the markets. Because what you have there is that then you're saying it's going to be dollar par. And dollar par is a big number. Now, let's go over to the bond market. We look at bonds. What we have with bonds out here is this. 30-year bond, she's coming along right with it, baby. Up 24 ticks, 317,000 contracts. She also wants to do an ABC structure in the way up. And this will be an absolute mind blower, because this ABC structure in the way up, folks, brings you up to 160 on the 30-year bond. You know, the number that we're looking at is 146.15 on this March contract. You know, so we'll see how we get there. But bottom line, as we're moving up higher today, we were moving up with conviction. Okay, so what do we have happen out here this morning? Well, you know, I was talking about yesterday how when you have large downdrafts, folks, what happens is that you normally have a spike in the marketplace. Sure enough, this morning, what ends up happening this morning, European Central Bank come out, they put their interest rates down 25 basis points, quarter point. What ends up happening? The euro goes up. Well, factually, folks, well, let's see, factually, is that the right word? No. Fundamentally would be the right word. Fundamentally, that is not how currencies work. You bring your interest rate down, bottom line, your currency gets weaker. So it was beautiful when that happened. I says, oh, here's the spike, okay, false move. Sure enough, spike lasted all of about, I don't know, a minute and a half. Gave it up in spades. Then you had Merkel come out. Merkel came out. They had all this rehearsed simultaneously. So first you had the president of the European Central Bank come out first. Then you had Merkel come out. Merkel came out and said that, you know, listen, we're not going to be able to solve all the problems. And they threw it all together in one pie. Now, they're meeting again tomorrow, but what they've already done is that they've already not only threw it together in one pie and released the information, then what they did is that they turned around and set up another set of meetings. The market is talking, it's walking, and it's squawking. If we go over and we take a look at the FTSE right now, what you have with the FTSE is this. FTSE is at 54.83. You know, not a bad move down for what's going on, but we'll see the FTSE tomorrow down to about 53.44. That's going to be a decent move downtown tomorrow. It was a decent move today, but tomorrow is going to be bigger. The DAX, same setup in the DAX. DAX really basically took a hammering. The DAX, you know, is at 58.74. She's going to be running right into this 5,200 level. You know, so there's, you know, the FTSE was off only 1%. The DAX was off 2%. Spain was off 4%. We go over to Asia. You take a look at Asia. What you have with Asia, last night we had the Hang Seng was down 0.6%. Shanghai was flat. Bottom line, folks, when you put it all together, we're going to be going south. Now, if we take a look at the ETF structures, if we come over and first we take a look at the 3Qs. 3Qs, what do? We had made a high out here on the 5th with 40 million. We come down with 50 million. Qs is dictating. Qs right now say they want to get down to 52 to 50, and right now you're at 56. We take a look at the SPY, the SPY. What the SPY did out here today, did 253 million shares. That's after making a high with 178 million shares. SPY wants to get down to a price point of 112. Right now you're at 123. The diamonds, we take a look at the diamonds. What do you have with the diamonds? Diamonds out here, big acceleration of volume, 9.5 million. Diamonds are trading out at the 119. Now watch this. This is pretty cool. 122.58 and 122.57. So what you had yesterday is this. So the diamonds came up yesterday to 123.57 with 9 million shares. That was testing the 122.58, which was the high of the 27th with 12 million. So you can see the test was on 25% lighter volume. Couldn't handle it, right? You have an expansion of volume today on the way down. Yesterday we did 9 million. Today did 9.5 million. What you'll see out here is you'll see another expansion on the way down. The diamonds want to get into 108.08. You know, if you were in front of a machine this morning, what you saw is something that's pretty unique, folks. And what I mean specifically is this. The currency moves had taken place. The dollar was going topside. The euro was failing. The S&Ps opened fairly, 7 or 8 points, nothing heavy. The Dow, however, if you're watching top-line Dow numbers, which is a huge mistake, by the way, okay, because you have 30 stocks, the Dow was only down 40 points. The Dow actually come back to even. What that's all about, folks, is that that's how true distribution gets taken place. What happens is that the larger players, any professional really knows that the way that you push huge amounts of stock out or jam markets is people pay attention to that top-line number. They're looking at that top-line number as they're pushing everything out. The garbage, all the garbage is getting pushed out, and that's exactly what you had happen out here today. You know, they kept Apple up at the same time. You keep Apple up, and you're pushing something else simultaneously. That's how huge distribution gets out there. My take right now is that we're actually in markdown, and you're going to see something that's pretty unique that we haven't seen for a while in the next few weeks. The reason I'm saying that is twofold. Number one, King Dollar wants to go. Euro's dead meat. If you're betting on the politicians in Europe to basically save Europe, Europe is done, folks. The Euro's done. It's done all but the crying over there. And the reality is that those countries are better off not being in the Euro because it's just a bank and slave labor deal. That's what it comes down to. You know, they'll have to go back to work. We'll find out whether they want to go back to work or not. But I suspect that that's going to break away. It'll take a year and a half, but they're not going to be able to sell bonds and euros. That's the bottom line. You know, last week on the 27th, that's when the Fed came in, and actually it wasn't on the 27th. That was just last week, wasn't it? That was the other spike up. The Fed came in with the announcement that they would basically swap U.S. dollars out with the European Central Bank, brought the interest rate down to 0.5%. Well, bottom line, folks, okay, those banks lined up, and they lined up extraordinary. We're talking about a huge acceleration in U.S. dollars. Listen, folks, come over to our website at TFNN. We have the Tiger Dollar promotion going on. We will match 30% of what you buy in Tiger Dollars, and then we're going to give from 5 to 10% in your name to the Salvation Army. We're going to be right back.